Crazy price action in the markets yesterday. Dow Jones down 67 points, Nasdaq down 27, S&P down 9.5, and Russell down 13.5 points. We had crazy price action. First thing in the morning, market sold off, bounced back, and then sold off again. Clearly reversed the rest of the day. Right around, I'm guessing somewhere around 10:30 or so, 11 o'clock. Yeah, just before 11 o'clock, markets finally couldn't push up any higher, and then sold off, and pretty much sold off the rest of the day. Okay, so why is that happening? Well, it's all about the yen and copper now. And copper is really taking it on the chin the last several days. And as I mentioned yesterday, copper really isn't the biggest leader as it was many years ago, but when you see copper selling off this far, this quick, this definitely raises a few eyebrows. And the reason why is that copper is used as a collateral for loans in China, which raises big concerns of possible defaults. So banks would have to sell their copper to raise cash, and that's going to put definitely concerns on growth prospects in China. Now remember, several weeks back when we had that 5% sell-off, emerging markets started that sell-off. And we need to really pay attention to what China's doing. And copper, again, is down this morning in the pre-market session, down about not too much, but I want to show you some charts in copper and the copper futures as well as the yen. Yen actually started popping up a little higher in the regular market hours yesterday around 10 o'clock, and that also put additional pressure on equities. So the market seemed a little fragile at these lofty levels. That does not mean that we can't go high, but we are at extensions. I've shown this to you many times. I'm going to show it to you again, and that's why I said keep your stops tight, and please do not get stubborn about taking your loss. If you have a loss, take it. That's what trading is about. We don't make money every day, but when you do lose money, you want to lose as less as possible. So when you are making that money, it's going to offset any of the losses. Okay. Want to show you a few things. I want to run into the bullish percent. Very, very reliable bullish percent, and it goes off the point and figure charts. But I just want to show you where we are here, and pretty reliable as you can see. We did have a little bit of push up and push down here, but you know we've been on a buy signal right around February the 10th, and we have rallied higher. Now we're just curling in here, so this is going to take a little movement here for it to roll over. Okay, let's take a look at USO bullish percent. Now, as you know, like to trade oil and gold, but the bullish percent right now, right into that 58 percentile, 59 percentile. I like to see this come in again. I like to see maybe this curl up, maybe get back down to this area here, base a little bit, and then maybe trigger a good buy entry. Right now, no entry in USO. I like to see this come in just a little bit more. And again, I like these bases. The base patterns are huge, especially in oil and the USO. Now, another interesting thing is the XLF. This is the bullish percent financial sector, right? Now, this here, beautiful base, and then really started to take off here. So now what I'd like to see is a pullback. Let the pullback happen, and we are getting a pullback in some of the banks. They did take it on the chin. Risk off, the banks would usually follow suit first. So, which is a good sign. And also, of course, some of the solars, because USO came out, and I'll go over that all with you. But this is exactly what you want. You want these pullbacks so that you can buy them at closer to support where you can manage them properly. So anyway, we have the bullish percent. I like this. This is what I'm saying, that the banks here are looking really, really bad, really healthy. But again, let the pullback happen first and let it base, and we'll just keep monitoring these sectors. Okay. All right. So now, what I want to show you is the stocks above the 50-day moving average. Again, we still haven't crossed that 8, but we are at an area where we usually get a little bit of a market pullback. Okay, the VIX. Now the VIX hasn't gone anywhere. Even it was up yesterday. I think it was 80 cents, but we are still tightening in the Bollinger Band. So let's see if we start to explode back out of this band. But again, the VIX has not gone anywhere, and it did pop up a little bit yesterday, but let's see if this VIX could have momentum to the upside. And again, that would put additional pressure on equities. Real quick, I always like to look and see what happens overseas in Europe. The DAX, which is the main follower, the main leader that everyone follows, and the DAX is now making lower lows and lower highs. So that is a big concern as well if you are a bull. So we have the DAX now moving lower. We have equities here at these lofty levels. You have to pay attention and say, hey, you know what? I'm not going to add that additional long position because I have 5 longs I'm carrying. Tighten up the stops, keep it nimble, and it's fine to buy a hedge. I mean, I really recommend, even if you do want to ride out the storm, if in fact the market does pull lower, buy some protection. I mean, it is cheap. It's what insurance is for. Now let's take a look at the EEM. And you can see the emerging market ETF, we're starting to break down again. Now, we did retrace, which is fine. We had that retracement rally. Everything doesn't go straight down. But now we're starting to get these large engulfing candles again. I'm just concerned that one day you're going to wake up and the market's going to be down 30, 40 handles. And that could be a big start of a major correction. And that's the concern I have going forward. Does not mean you can't take a short. Does not mean you can't take a long. Take it day by day. Trade intraday. And, maybe 1 or 2 short trades or 1 or 2 long trades in the overnight session, but don't be too overly exposed here because the markets can really, markets are fragile right now. Even though we're still overextend at these levels, we're at major extensions. We have issues going on in China right now. Copper selling off, and that's what I'm going to show you next. Here is the daily chart of copper. Look at this. Even though copper has not really own up to its expectations as Dr. Copper, its leader, right? Because it has been ignored the last year or so. I can remember just a little over a year when copper ticked higher, markets moved higher. Literally, it was a leading indicator because it is an industrial metal, and it does gauge the barometer of the health of the economy. But when you have something like this happening, and now emerging markets are starting to falter, and you have the yen starting to rise a little bit, that is a big concern. And I want to show you, this is copper ETF. I'm sorry, this is the copper future, the HG. Now look at this. This definitely will raise some eyebrows, especially when you see markets flushing like this, 4 days down. That is a major concern. Again, and when copper is used as collateral for loans in China, and their collateral is really starting to sell off pretty hard, there's nothing left but to start selling copper to raise cash, and these banks are going to have to do so about their concern about defaulting. So this is big, and look, we're down 42 cents already, and it's early morning pre-market. So this is a big concern where I could see this market start to sell off now. In the ES, we're only down about 2.5 handles. Not much of a concern at the moment, but this risk off happens very, very quickly. So I want you guys to be aware of that, okay? Here's the ETF. Excuse me, I keep calling ETF. Here is this Japanese yen future. Now look at this. Now we still need to get back above this area at 97.50. But remember, I want to just show you a 5-minute chart. And if you see a 5-minute chart, look what's happening right now as I'm speaking. As copper's moving lower, the yen is rising. Okay, and this is the overnight session. We've taken out the overnight highs. Okay, and now what we're going to need to look at here, let's go into a 15-minute. And you can see this is clearly now back up in an uptrend. So if the yen starts to move higher, and you're going to see dollar yen move lower, you're going to see copper prices move lower. What else? Also, equities will follow suit as well. Okay, let's take a look at the ES, and this is now we're talking about how we're at extensions. And look at the volume starts picking up every time you have a distribution day. Okay, you see these distribution days, you have higher volume on the sell side, which marks a distribution. Now we're starting to roll. We are at only the 8, which is not a problem. But now the next target would be this the 20-day moving average. If we start to break the 20. You got to say that this could be a major concern here. So remember, guys, just use caution here, especially if you're trading some of these high beta names. I want you guys to be aware that they'll be the first ones to get sold. So just again, a word of caution being at these extensions. Take a look at the hourly chart, and well, now we're down. Now we're down 3 handles. So the market's starting to lose a little bit of its steam to push to the upside. So again, at extensions. And we're starting to make lower lows and lower highs. Right? So we need to really pay attention to this area here. This 1860 area is going to be the next spot, and then of course, once we bring it back down to this 1850-ish, 1846 area, that'll be the next major spot that I'm looking at for the market to at least hold and pause. Okay. Now let's get into some of these charts, and I'm just going to go through them quickly. Here's gold moving higher. Bonds actually moved high, but they didn't really move too much. And now we have, as you can see here, we are still underneath this uptrend line. back tested it. So now we're starting to move lower while gold is moving higher, and the bonds are not actually selling off. Again, this has been a red flag of mine for the last month. Not that you can't take a long position, but you just have to be ready and be able to get out of these positions quickly so you don't get stuck holding the bag here. Okay, now here's the spiders. As you can see, we're starting to roll. Now, we did have a small bull flag here, and that bull flag is now broken. Okay, if you could see it, let's see if you can try to get. It's now broken, and now we did close at the 8. If we start losing the 8, the next stop is going to be the 20-day moving average. So these small bull flags did break lower. If it's breached, the next next step, would be the 20-day moving average on the spiders. Okay, transports. Now, transports did move higher yesterday, and I said, look, we have to take out the transports start to move higher, and we take out this zone. Then I would say the markets look for higher highs because now the transports are moving higher, and they're moving out of this consolidation pattern here. So take a look at that. But we did actually reverse. So now we got to take the cue from what the transport's going to do today. Keep an eye on it. This is our leader here, and also the Russell. You know, Russell really took it on the chin yesterday, and remember, Russell 2000, higher risk, good gauge of risk. And now we're breaking. We're basically at the uptrend line from November 2012 lows. If we start to lose this today, you will see the 20-day moving average will be your next target, and then, of course, the 50. But watch this because this is another concern of mine here. You're having one of our leaders starting to break down. And you could even take that right about here, and you could see how, you know, we broke down here, we popped back up again. Now we're back below this little trend line here. So interesting developments. But, again, cracks are starting to be present here, and it's something that we want to just really pay attention to. Okay, we have the Q starting to break here. What we do have, remember, we have Bollinger Bands are pinching, not telling us exactly what are we looking for, what direction of this break is going to happen. So that doesn't tell you that. Just tells you the energy is building. We're building a big base in here, and it's going to be eventually start to vacate this area. So watch what the Qs do. Now remember, Apple actually worked out pretty well. We did get a little bit of that break when I showed you yesterday. So pay attention to Apple. Apple's holding up very well here, and that will hold up the Qs. Here's the diamonds again. Diamonds is one of the laggards. So if the transports sell, Russell sells off. So will the diamonds, which is the Dow Jones ETF. Just go run through some of these sectors, and you can see here we're holding well above this 200-day. Now remember, look at the Bollinger Band starting to pinch again. So we have some movement, and what's happening here? We're making higher lows, higher highs, higher lows, higher highs, higher lows, and this little price action starting to move higher. And again, now we have actually turned the corner of making lower lows, lower highs. Now we have bullish price action moving higher. Okay, so be careful here. Now, gold is running up for a reason, and that's another reason why I'm very cautious here. Okay, USO testing the 200-day moving average. Let it go, guys. Don't be picking a bottom here. I think we're going to get a better setup in USO, but it needs a lot of work. No trade in gold and no trade in USO at the moment. Here's the OIH, and again, this is good for it. And we're going to keep monitoring these trade ideas because some of these trade ideas will turn into some long longer term trades that you'll be able to hold for a couple of weeks, couple of months. So right now it's pulling back exactly what we want, a little overextended. I want to see it really come back to the 50-day moving average. Same thing with Schlumberger, as you can see, moving back down here. I like to see this break back into this the upper end of the base. I don't want to go back into the base. I want it to back test this upper end of that trend line. That would be a better position. Here's the XOP, the oil and gas ETF. Again, now would hit the 50-day. Big engulfing candle. We have a distribution day. That does not tell me to buy. Okay, that tells me I'm getting excited, but I'm not looking to pick a falling knife. It needs to break, it needs to base, and then break out of that base again. But again, it's setting up for something better to come. Now here's Valero. Look at Valero. Strong as can be. It is one of the leaders in the heavily weighted in the XOP. But as you can see here, a bit extended, and if the XOP is moving lower, which means that stocks in that ETF is moving lower, I'm not going to buy Valero at these levels. I want to come in back into maybe the 20 or the 50, and that's where you can start accumulating some of these stocks. I think personally the market is set for a pullback. I mean, obviously I'm not going to go out and force and short and put a short out there, but an intraday short I will probably look to try and short that. Okay, here is the XLE. As you can see, this looks really good, and it's creating a nice little base here. If you could see that base, it's really creating actually even a pennant, some sort of a symmetrical triangle within up this big bearish rising wedge that did break. Now it's back in it again. So I'm looking for this to actually break higher. I would love to see this come in a little bit more, or maybe hold this uptrend line and then look for the ETF. Now the XLE has Exxon, Chevron, and of course Schlumberger, Oxy Petroleum. These are some of the top names in here. Take a look at, pick 2, 3, 4 of them, and then look for some entries in your trading plan. All right, now here's TAN. Now, if oil goes lower, so does alternative energy as far as solar is concerned. So it is now moving lower with oil. So, but it's doing nothing wrong. As you can see here, it did break the 8. Next step is the 20. But really, it's just flagging, right? So we want to see this could come in a little bit, and all the solars obviously will move lower within this ETF. So take a look at YGE. Came right back in again, not a problem, but if you bought this, you should be having a stop in place, or you should be out of it already. But this is another good spot that we can look to probably get into some of these solars again. Here's First Solar moving lower. Okay, Trina Solar did the same thing, moved lower on a break. Now holding the 20-day moving average, heavily shorted these solar stocks. So when the market does roll over and does set a low that we can trade, a tradable low, when that time comes, these are the stocks you want to start looking to buy. All right, now this is what I'm saying. Be prepared for the downside and look for stocks that you're going to look to buy. Here's the home construction, obviously pulling back in again. These stocks don't go straight up, and this is another reason why I'm saying, you run a profit here. You got to take profits as the stocks or the ETF move in your favor, because why? In 2 or 3 days, as much as they want them, they hate them again. So they're very fast right now. The markets are very fast. Price action is very fast, so you need to be nimble. Here's Lennar coming back in. Again, this is what I like to see. Let it roll back up again, and then boom, right back into this area here. So Lennar, something I'm looking at. PHM rolling back in here. But if you see here, that little symmetrical triangle, look at the trend line here. You could see that this area, we're just now holding this trend line here, this other trend line, making higher highs and higher lows. So PHM I like a lot. I still like a lot. KBH now, a little bit of a concern for me. Again, I am not long any of this, just full disclosure. I'm looking for opportunity when the pullback has subsided and bases, and then we can start breaking back out again. Now, I would have liked to see KBH hold this upper end of this range, but now it's back into this channel. So now we'd like to see where this thing stops. Now, remember, we do have a small little trend line right up in here, which again is now breached. So we have 2 spots to look at. This needs a lot of work. I would stay away from KBH. And wait for a little bit more of some sort of a base building here. Now the XLF, I showed you that XLF, the bullish percent. I like it, but again, I don't like it 5 days up. I like it pulling back, making a higher low from this previous low. If it could hold this uptrend line, that would be a good spot to at least to look for some of the banks. Now look at Citibank, really sold off pretty hard here from this 5-6 day move up. So anytime the market runs up 3, 4, 5 days on a stock, the last thing I want to do is start buying or adding to my position. Okay, and then of course there's Goldman, JP Morgan coming back in again. Goldman as well took it on the chin, as you can see. And again, this is a good spot right at the upper end of this base. Another day or 2 of selling, Goldman might be interesting here if the market can stabilize. Okay, so this is a good spot for it, right around the 50-day moving average. And then lastly, of course, is Apple. Now, Apple is starting to pinch again. So, whether you're looking at a put credit spread, an option strategy, or looking to get long, or just buying outright calls, Apple is looking good here, looking really good for another break higher. And I love the base building, as you can see. And also, if you really want to take this in here, you can see this is actually a symmetrical triangle. So right up in here with the Bollinger Bands pinching, this looks like it's going to vacate the area. So put credit spreads for this week or even outdated for next week. But remember, if the market does sell off and it sells off hard, it's going to take out all of the good quality stocks. Because why? Because that the retail crowd has bought a boatload of stock on margin. And when that happens, when you get margin calls, they have to liquidate good stocks to finance their bad positions. Remember that. All right, guys, be careful out there. Markets are starting to be really whippy, and they're starting to move quite quickly. So be on your toes. We'll talk to you tomorrow. Have a great day.